Have you ever wondered if 500K is really enough to retire on? That's the number I started with when I retired last year. Just $500,000 and a plan. No pensions, no second income stream. Just me, my savings, and a determination to make it last. Since then, I've been sharing the ups and downs, what's working, what surprised me, and what retirement really looks like when you're living on a more modest budget. So let's talk about September. I'll walk you through where my portfolio stands right now, how I've got it set up, and how YouTube has turned into this wonderful bonus that I never expected. Before we get into the numbers, let me show you how I have things structured. I keep it pretty simple with 3 buckets. Bucket 1 is cash and safety, and about 18% of my portfolio. It's just enough sitting in cash and short-term savings so I don't panic if I have a surprise vet bill or the market takes a dip. Bucket 2 is income investments, around 52%. That's my dividend mutual funds, CDs, and bond funds. These give me steady, predictable income, which makes covering my monthly expenses so much less stressful. And then there's bucket 3, my growth bucket. About 30% right now invested in stock index funds and some tech ETFs. I don't plan to touch this bucket for years, which gives it time to grow. And honestly, I'd like this bucket to be a little bit bigger. So the next time the stock market dips, my plan is to shift more over. Ideally, I'd love growth bucket to be 40 to 50% of my portfolio, enough to give me long-term upside while still keeping a solid cushion in the other buckets. How do you balance safety and growth in your own plan? Drop it in the comments. It's always so interesting to see all the different approaches people take. One reason I keep my portfolio on the conservative side is peace of mind. Sure, I could chase higher returns by going all in on stocks, but I'd lose sleep every time the market dropped. I'd rather give up a little potential upside if it means I can cover my bills, stay steady, and enjoy my retirement without second-guessing myself. Growth matters, but so does sleeping at night. This setup means I've got choices. I don't have to sell stocks when the markets are down, and I don't have to stress about whether my bills are covered or not. And when the market does well, like it did this month, I actually get to enjoy watching my balance go up, even while I'm spending from it. And let me tell you, seeing money flow out of your accounts every single month never feels completely normal, even when that's the plan. After years of saving, it still feels a little weird to flip the switch and start drawing down. That's why months like this one are so reassuring. Even while I'm withdrawing, my balance is still moving in the right direction. It's proof that withdrawals aren't the enemy when you've got a solid plan. Now, please remember, I'm not a financial advisor. This is just the approach I use, the choices that help me feel steady in my retirement. Take what's useful for your own situation and leave the rest. So let's break down the numbers. My money market has $29,351. My after-tax brokerage is sitting at $111,240. My HSA has $4,200. My Roth is at $20,840. My pre-tax IRA is at $400,847. Add everything up and my total portfolio is $566,478. So here's where I stand in September 2025. I started with $500K, added $90K from the sale of my home, covered my living expenses for a year, and today my total portfolio is just over $566,000. I've got safety, income, and growth all working together. And here's the part that made me smile this month. Even after paying all my normal expenses, my portfolio still grew by about $6,800. That was a good reminder that my plan isn't just numbers in a spreadsheet. It's actually working in real life. Now let's talk about YouTube. Y'all were really supportive in September. My earnings were the highest I have ever seen at $2,500. Thank you so much for your support. Honestly, I never thought this would be part of my retirement. I built my plan before I ever made a video, so this money is such a happy surprise. It's given me more flexibility, whether that's putting a little extra into savings, covering fun stuff, or just knowing I don't have to stress quite as much about monthly bills. And because I don't rely on it, there's no pressure. It feels like found money or a surprise bonus check. Now, one thing I keep seeing pop into the comments goes like this: if you're making money, then you're not really retired. And once in a while, someone even goes so far as to tell me that I should demonetize my channel just to prove it. But here's how I see it. Retirement isn't about proving anything to anyone. It's about freedom. I don't have to work. I choose to make videos because I enjoy it and I'm helping people. And if they happen to bring in money, that doesn't cancel out the fact that I'm retired. It just adds more flexibility and choice. And honestly, turning down such a nice chunk of change every month just to prove a point to a random person on the internet, that doesn't sound like good retirement math to me. For some people, retirement is golf every day. For others, it's volunteering. For me, it's biking, taking art classes, making these videos, and having the freedom to change my mind whenever I want. That's what retirement looks like to me. And a big part of how I've made it work is also by cutting out the stuff that doesn't matter so I can splurge on the things that do. I don't spend on every shiny new thing. Instead, I save for experiences that actually light me up. Like in a couple of weeks, I'm heading out on a week-long guided e-bike tour in West Virginia to see the fall foliage. That's exactly the kind of thing that I want to spend my money on. Fun, friends, and building some awesome memories along the way. And because I've structured my retirement this way, I can say yes to things like this without second guessing myself. The lesson I'm taking away from September is that retirement isn't just watching your savings shrink and hoping it lasts. With the right structure, your money can keep working even while you're spending from it. That balance is what turns retirement from something stressful into something livable. And as I look ahead, there are a few things on my radar. Interest rates will affect whether I keep rolling CDs or shift more into my growth bucket. The stock market could give me that dip I'm waiting for to increase my growth bucket too. And of course, the closer I get to 62, the more I'm thinking about Social Security. I'm 60 right now. That decision is one of the biggest pieces of this puzzle. So if you're curious how I'm approaching that, check out this video where I walk through my thought process for deciding when to claim. It might help you think through your own timeline.